Retail investors are completely abandoning Avalanche right now, looking at the sluggish price action and calling it a dead chain. But while the timeline is distracted, over $2 billion in tokenized real-world assets are quietly migrating to a dedicated Avalanche subnet. We are looking at a classic divergence between terrible retail sentiment and massive institutional accumulation. And when we look at the weekly chart, Avalanche is currently sitting inside a massive falling wedge structure that dates all the way back to the 2021 highs. The last two times price retested this pattern support, we saw rallies of 1,460% and 650%. Today, I'm going to show you exactly why I'm allocating capital in this specific $7 to $10 zone, and how the underlying network data supports a major macro reversal. Let us look at the data. Avalanche is currently trading around the $8 to $9 range. If you have been watching the screens over the past month, you know the macro environment has been absolutely brutal. Bitcoin has been dropping hard, and it's dragging the entire altcoin market down with it. Avalanche is no exception. We lost a major support level at $11, pushing us down into what I consider a maximum pain territory for the average holder. But this is exactly why this video matters right now. When fear is the dominant emotion in the market, that is when you need to step back, ignore the noise, and focus purely on market structure and verifiable on-chain data. Most traders are panicking because they are zoomed in on the daily timeframes, getting chopped to pieces by volatility. As a yield-focused investor, I'm looking at macro risk-adjusted returns. The weakness we are seeing across the crypto space is creating a structural inefficiency. The price is bleeding, but the fundamental infrastructure of Avalanche is actually securing partnerships that most Layer 1 networks can only dream of. But there is something specific in the technicals that changes this entire picture. The on-chain metrics explain exactly why this $7 level is the ultimate line in the sand. To understand where the price is going, we first need to understand who is actually using this network. The most critical data point we have right now is coming out of Japan. A massive digital asset infrastructure organization called Progmat is launching a dedicated Avalanche Layer 1, utilizing the Ava cloud infrastructure. They are migrating over $3.5 billion in tokenized securities, with another $2 billion in real-world assets headed to the network. This is not a speculative partnership. This is heavyweight traditional finance choosing Avalanche for its built-in privacy and custom subnet architecture. They are doing this because Avalanche offers a verifiable Nakamoto Coefficient of 29, supported by 719 validators. For institutions deploying billions in capital, that level of mathematical decentralization is a mandatory prerequisite. When we look at the internal network revenue, the picture gets even more interesting. Over the last 365 days, Avalanche generated $7.7 million in total transaction fees, all of which are burned. This grants ranking 6th among all Layer 1 blockchains. Now, compared to Ethereum, that might seem small, but you have to factor in the cost to the user. Avalanche officially boasts an average transaction fee lower than 1 cent. They are undercutting Base, Polygon, and Hyperliquid. This microcent fee structure is exactly why Tether and Circle are the top 2 fee-generating applications on the network, supporting a healthy ecosystem stablecoin supply of $1.6 billion. However, I have to be objective here. The data is not entirely perfect. Avalanche ranks 11th in developer code commits, with 8,300 over the past year, and the network processes around 33 transactions per second, ranking 10th. Retail block space demand is clearly subdued, showing that regular users are not highly active. But the Avalanche Foundation knows this. That's why they just launched the Retro 9000 program, injecting a $40 million grant pool directly into the C-chain to incentivize developers and builders. They are aggressively buying back market share, leading us directly to the charts. Let us move to the weekly chart, where the long-term trade setup becomes incredibly clear. We are currently analyzing the weekly time frame as it filters out the daily noise and shows us the true institutional market structure. Right away, you can see that price action is trapped inside a massive falling wedge, outlined by these orange dotted lines. This pattern captures the entire macro downtrend from the all-time highs of $140 all the way down to the $10 region. About 10 weeks ago, AVAX price actually broke to the upside of a descending trend line, which I have marked with a white dotted line. It looked like a confirmed breakout, but the market was immediately rejected at the 236 Fibonacci retracement level, sitting exactly at $15. Because Bitcoin began falling hard, Avalanche dumped right back into the wedge structure. We are currently trading below both the 21 weekly exponential moving average, the red line, and the 55 exponential moving average, which is the purple line. This confirms that the bears are technically still in control of the midterm trend. But notice where we are landing. We are currently compressing into a major support zone at $8. This level matches the flush candle from October 10th, and it aligns perfectly with the previous bear market lows established in 2023. If we anchor our Fibonacci retracement from the recent high of $36 last September down to this $8.50 region, our key macro targets become very clear. The 236 resistance is at $15, and the golden pocket 618 level sits at $25. Now, look at the bottom of your screen. The Heikin-Ashi Relative Strength Index is flashing a critical signal. We are currently sitting in extreme oversold territory. This indicator is also respecting its own falling wedge pattern that has been forming since the beginning of 2024. The last time this indicator hit this exact oversold region 10 weeks ago, we saw an immediate bounce in price. The compression between the price action and the momentum oscillator suggests that a violent move is brewing. The institutional volume is waiting for a liquidity sweep. So, here's exactly how I'm playing this. AVAX currently represents 3% of my total crypto portfolio, while 65% remains safely in Bitcoin and Ethereum. I already hold a core bag of Avalanche that I absolutely will not sell at these depressed prices. Instead, I'm treating this current drop as my final dollar cost average zone. My accumulation box is highlighted in green, stretching from $10 down to $7. I'm placing limit orders here, anticipating the price might wick down to retest the bottom support of the falling wedge. I'm not guaranteeing a liquidity sweep, but I want my orders filled if the market panics. This is a long-term position trade meant to play out over a minimum of 6 months. My take profit targets are marked with green circles on the chart, set at $15, $20, $30, $50, and $80. I'll be trimming my position the hardest at the third target of $30, as that aligns closely with the macro wedge resistance. If I achieve the first target, I'll manually move my stop loss to my average entry. Once the second target is achieved, the stop loss moves up to target 1, and so on. For risk management, a definitive weekly candle close below the falling wedge support serves as the technical invalidation level for short-term traders, but my strategy relies on long-term accumulation. To summarize my thesis, the retail market is entirely ignoring Avalanche right now, but the fundamental migration of billions in real-world assets combined with a textbook technical falling wedge creates an asymmetrical risk-to-reward ratio. Remember, the most profitable investments are made when the charts look terrible to the untrained eye, but the underlying data proves the network is actually growing stronger. You have to let the data dictate your strategy, not your emotions. If you found value in this data-driven approach, make sure to like the video and subscribe to the channel. I highly recommend joining my free Telegram group for faster daily market updates. The link is in the pinned comment below. Also, take a moment to watch my last 2 videos on AVAX currently on your screen. They provide the complete historical context for this project. Keep in mind, this is simply my personal market analysis and not financial advice. Thanks for watching, manage your risk, protect your capital, and I'll see you in the next analysis.